Alright, what's up guys? I got a banger of a video for you guys today, so it's going to be kind of quick. I have a lot of information here. I'm going to try to go through it as quick as possible because I have to go somewhere, but I'm going to try to do this all in one take without any cuts. So basically, Oatly, as you guys know, is IPOing today. They're estimated to have a $10 billion valuation, $10 billion market cap, whereas Beyond only has a $4 billion current market cap. So there's a lot of talk, whether or not this market cap is justified, whether or not Oatly is justified to have a market cap larger than Beyond's. But so we're going to look through their financials here and everything and just compare a bunch of stuff, guys. I have a bunch of info here. Try to stay with me here. So in terms of revenue, they have pretty much the same revenue. Beyond has 407 million compared to Oatly's 421 million. They have a little bit of an advantage with that. In terms of 2020 losses, they both lost around the same amount of money as well. Again, in terms of revenue and losses, they're pretty much neck and neck here. Definitely two of the biggest players in the plant-based industry. Now, here we get to addressable market size in 2030. And the reason I go to 2030 is because that's how long I plan on holding these stocks. That's how long I believe it will take for them to grow into these valuations. That's why I use these 2030 estimates. Now, these 2030 estimates, guys, they're really, really hard to predict. There's a ton of different estimates out there. Some people predict the most popular ones right now is 85 billion for the plant-based industry, and I think 40 billion for the plant-based dairy industry. Now, I believe that those are both underestimated, and the reason for that is because, to be honest, I don't really have much reason. It's mainly just my feelings. I mean, there are some statistics to back it up. For the plant-based meat sector, I believe 10% market share could be captured by 2030. Because a lot of Gen Zs and millennials, they're going plant-based, and I don't think it's too crazy to think that 1 out of every 10 people by 2030 will be eating plant-based meat. Again, that just doesn't seem too crazy to me. Now, in terms of the plant-based dairy industry, though, that's where it gets kind of crazy. If you look at this recent poll that came out, it was found that nearly 50% of Americans plan to drink plant-based milk regularly. And one of the reasons for that is it's a lot easier to convince people to drink plant-based milk as opposed to fake meat. Unfortunately, that's just how it is, guys. So because of that, the regular dairy industry, only including milk and yogurt, because if you look at the distribution of the dairy market worldwide, we have 54% being from milk, 16% from yogurt and fermented milk, and 6% from flavored milk. And I just combined all those together to get 75% because that's all that Oatly really is addressing right now. Yeah, sure, they do have ice cream too, but I'm not really sure where that falls in. So basically, I took 75% of the estimated $1 trillion dairy industry by 2024. And the reason I use 2024 for the dairy industry is because that's the only numbers we have for the dairy industry. And the meat industry is estimated to be 1.5 trillion by 2030. So if the plant-based milk industry could capture 50% of that 752 billion, that would be a addressable market size of $376 billion by 2030. And obviously with the plant-based meat industry, it's 10% of the 1 trillion. So yes, according to my calculations, the plant-based dairy industry will have a larger addressable market size. But along with that, they also have much swifter and fierce competition. You guys have seen it if you go into the plant-based milk section. There's a ton of competition. It's a lot easier to make plant-based milk than it is to make plant-based meat. And for that reason, Oatly might struggle in capturing market share. Now, for the market share portion, this is assuming that they're able to capture 25% of the plant-based industry, which Beyond, as you guys know, guys, 40 billion is my price target, and this gives us roughly 40 billion. I believe that they will be able to capture 40 billion in revenue, 25% of the plant-based meat industry, because they are the industry leaders and they have the superior product, in my opinion, and the first mover advantage. So whereas Oatly, this is where it gets a little dicey. So Oatly, I do believe that they have the superior product, but do you believe with all the fierce competition that they will be able to capture 25% of the market share? Because currently they're only capturing 4% of the current market share. If we go right here, see right here, Oatly as a brand has only a 4% market share of the plant-based dairy industry currently. Now they are growing rapidly, guys, but if you take only 4% instead of 25%, then that only gives them a $15 billion market share by 2030. Now, do I believe they're going to stay at 4%? No, not at all, because again, I think they have the superior product as well. They have the patented enzyme technology. They also have a lot of hype around them. They have the Starbucks deal. So let's say maybe they won't get 25%, but maybe 15% is more fair. So if they can capture 15%, then they will have... So if they're able to capture 15%, then they'll have roughly 50% more revenue than Beyond in 2030, which could justify a 50% higher market cap, which would put them around a $10 billion market cap currently. But if you think the competition, again, is going to be really fierce, maybe they're only able to capture 10%, then they have around the exact same amounts of market share that Beyond will have, meaning that a fair valuation for them would be the same market cap as Beyond currently. And then if we go back to 25%, then they would have a little bit more than double the market cap of Beyond would be justified, so that even a $12 to $13 billion market cap would be justified in that situation. Now, again, this seems pretty crazy with all the competition. I really think like 10 to 15% is more fair. So what do I think of all this? All I know is I love Oatly as a company. I think they have amazing products. Who knows, they might be branching out into cheese later. I think they actually do have cream cheese as well. The thing is, guys, if you like the company and you have conviction in the company, then you should invest. Now, obviously, the investing strategy is what makes you the most money. You don't want to throw down a huge chunk of money when it's overvalued and then, have to wait and get in at a shitty average price. So obviously, guys, you know the strategy I like to use the best. It's dollar cost averaging. Just putting in a set amount of money every month, no matter what the price is. So that way, you're able to buy on the dips, you're able to buy on the pumps, and then it kind of evens out and you get a nice average price. Or you could also put down a base amount at the IPO. Like I plan on putting down like $1,000 at the IPO, and then I plan on dollar cost averaging up to 100 shares from there. Invest in the company if you believe in it, but just do not throw down all of your money all at once at the IPO, because IPOs in general are known to go down. In general, IPOs will go down from their IPO price. 20, 30, even 40%. So my advice, guys, again, put a nice base down, maybe like 10% of what you plan on investing, and then just dollar cost average from there. Be patient, guys. We have years for these markets to grow. We have years for these brands to grow into their market caps, to grow into their valuations. So again, guys, no rush as of now. But anyways, guys, that's going to do it for this video. I just wanted to get that out there. I also had all this shit down here, too, that I realized ended up being kind of irrelevant because that was with my old valuation. So just ignore all this shit, guys. That was with my old valuation before I did more research. So yeah, sorry, ignore all this. This is all irrelevant. This is what matters, okay? But anyways, guys, that's going to do it for this video. Leave a like if you enjoyed it. I hope it was helpful. And good luck to you guys with Oatly. We have 2 of the 3 Holy Trinity companies of plant-based foods now public, Beyond and Oatly, and now we're just missing Just Egg. My goal, guys, is to own 100 shares of each of these companies and just ride them out till 2030. That is my goal. But anyways, I'm going to get going, guys. Catch you in the next video.